Hey, folks, we are live. We have quite a bit to go over. I hope everybody took their medication, their whiskey, their Xanax after today's events. I just took some CBD oil, feeling really good. So let's get to it. I want to talk about my background, what you see behind me, because tonight is going to be a night of frankness. It is going to be about comparing current state to prior state. What does that mean? Current state meaning a weekly chart of the NASDAQ composite relative to the dot-com bubble. Where are we in that cycle? We're going to go to that in a moment. We're going to talk about the economic data that was released today. We'll talk about Fed Chair Powell. We'll talk about the Fed's balance sheet. And we will talk about how to prepare for what is probably about to happen. And I don't mean preparing in terms of My Patriot Supply getting bottled water and whatnot, stuff like that. I'm talking about up here psychologically. And I've traded through three bubbles now. Well, actually, let's say two bubbles and one crash that was in actually two bubbles, two crashes if you include the flash crash. So if you include the COVID bubble correction as well. So a lot of volatility. Through every single one of those instances, the markets sent us a signal that all was not well. Volatility rose. Economic data was not good. Fed policy was bad. They were too late to the party to raise rates, and they were too aggressive raising rates. So we find ourselves now in an even more ominous situation where we found ourselves back in 2000, where we were a creditor nation back then. We weren't a debtor nation. In fact, the last budget surplus that we had was it was either 1999 or 2000, one of the 2 years. That was the last time. Now we are $20 trillion in debt, and we are a debtor nation. So why do I have this money in my background? What is that to imply? That I made hundreds, thousands, millions of dollars in the past couple of days shorting the market? No, I did not. I will share with you how my past couple of weeks was, so that way it shows honesty. It shows dedication to craft. It shows that if you are not honest with yourself, and you could freely talk about, hey, I had a bad couple of weeks, then you're just BSing yourself, and you'll fight this market. If you fight this market as I did in 2000, you will have a lot of headaches. Do not fight this market. The path of least resistance has changed, and I'm going to show you the charts in a moment. So the purpose of having this background behind me today is to illustrate the most important word you could possibly have in your vocabulary right now. You ought to write it down, post it onto your monitor. The most important word that you need to have in the front of your mind at any given time is this: liquidity. Am I liquid? Or am I too levered on margin? Am I too overly weight a specific stock that I love? I love this stock. If you're in love with a stock, you have a problem. You got to get liquid. If you're overweight stocks, talk to your financial advisor. Ask him what is his exit strategy for your positions. What does he believe the stock market will be doing if we get a four handle on the 10-year yield? If you can't answer those questions in one single line, one elevator speech, you got the wrong guy. You got the wrong guy. So This background has zero to do with how much money we just made shorting the market or buying the dip. Has zero to do with it. It has everything to do with liquidity, being flexible, being nimble. Will you be liquid when everything bottoms out? Will you be liquid so that when we get a counter trend rally, you can short this market? That's the purpose of these $100 bills behind me tonight. Let's go to comments. Say hello to people. Talon, saying hello to Donnie and Rick on. Good. Happy Cinco de Mayo. Yeah, yeah. Donnie, welcome. Hey, Kat. Kat, did you have a short Pfizer? I was thinking of you today. Oh, look at this. Check Pfizer. Look at that. I swear I didn't see that. You bet. Paul, hello. What's going on, Talon, everybody? Hey, Rick. I have 6 months of meat in my freezer and a 50-pound bag of rice. Good for you. Screen frozen from anyone else. Pete, hello. How are you? Okay. All right. Okay. Let's get to it. So the Federal Reserve met yesterday. Powell got accolades for his statement. And one of the things I mentioned last night on Market Wrap was that I mentioned to members that while what he's doing is taking away liquidity vis-a-vis raising rates, in all probability, when after the market today, meaning Thursday, when they release the Fed's balance sheet, you will see a rise in the Fed's balance sheet. That is a signal that the Fed is still got your back. So after the close today, I checked the Fed's balance sheet. You would have thought they raised a quarter point, then a half point. You would have thought that their balance sheet would have weakened some. In recent weeks, it has weakened a little bit, but they had to do it. They had to send the message that, okay, we're not really all that serious about cutting rates or raising rates. So the Fed's balance sheet rose only a token amount, but still, it's showing that we are still putting in a topping action here, and that once we begin to take out lower lows on the Fed's balance sheet, you got to get ready for the market's reaction. It's not going to be wonderful, because always remember what brought us to the party, right? Was it sound economic growth? I don't care what who the president was, Obama, Trump, the potato in the White House. I don't care. Blame them all. Pox in all their houses. Goes back to the Bushes and the Clintons as well. What brought us to this party? The Fed's balance sheet. The Fed's balance sheet. So what happens to the stock market? As you can see here, monthly chart of the Dow Jones Industrials, not all that different from the Fed's balance sheet. So what happens in June when they do begin to roll off debt off of their balance sheet and then increase it in, I believe it's August? You got to figure that the path of least resistance is going to continue to be to the downside for equities, in particular growth stocks. So we have a Federal Reserve that's now stated that they have a very sound and passionate plan for raising interest rates. The stock market, despite the vast majority of the S&P 500 companies already announcing remains extremely overvalued, very, very overvalued. Then you fast forward to this week's economic data. We had the ADP employment report, which came in light. So this is a jobs report. Remember, tomorrow is Jobs Friday. ISM Services Index missed. We know about the FOMC statement. Fast forward to this morning. We've had a few weeks of sub 200,000 initial jobless claims. Today, initial jobless claims rose. Productivity. This is the one, actually, both of these reports here got the market. Productivity declined. They expected a negative number of 5.2%. So basically, this is the amount of productivity you get out of an individual worker, right? So you're getting less productivity out of that worker, yet your unit labor costs are going through the roof, yet still below the rate of inflation, the real rate of inflation, not the CPI. So tomorrow, this is the reason why you saw the stock market buckle today. Tomorrow, non-farm payrolls, I'm not expecting all that much. Now, when you take a look at the labor market on a visual, this is from Lizanne Saunders, to give her credit. This is the first up week in a year in new job cuts announcements, net positive announcements of job cuts. This is going higher. Wells Fargo, they're laying off a lot of their mortgage department. Why? Yields are going up. Nobody wants a mortgage. Who are you going to refinance at a higher rate? Doesn't make sense. Again, productivity, as I just mentioned, crashes the most since 1947, a powerful headline. So we have all this economic data that is coming apart at the seams. We have the Federal Reserve raising rates into this nightmare scenario. Add to that, we have corruption, the likes of which we have never, ever seen in this country. This is from Elon Musk. He's blasting Soros. I love Elon Musk. Blasting Soros. They're threatening his advertisers already to try to kill this deal. They know that they are losing the grip on the narrative. These leftist communists, like this son of a bitch right here, they are losing their grasp, and they are not going to go down without a fight. Here he is chiming in again. They want to kill this deal. They could taste it. They got to kill this deal. They cannot have free speech on the Twitter platform. They are attacking our institutions. For the first time in my lifetime, and it's a pretty long time, I have never heard a leak out of the Supreme Court. Here you have corruption now. They're attacking the Supreme Court. The third pillar of our government, the fourth pillar is supposed to be the news media. They've already been shot and killed. Now, yeah, they're coming for the Supreme Court because of Roe v. Wade. And they would have found another reason anyway. Tomorrow, we get Powell out, apparently. And the speculation is that he will be jawboning the market down. I don't know how they know that. I haven't read through this article yet, but I'm going to share it with you. Read it at your leisure. I will be reading it later on. Janet Yellen admits Biden's spending did feed inflation. This academic, this child of a woman, she is a leftist, a Marxist. She's in charge of our treasury. They want control of the treasury. They want to bankrupt this country. They are sending $33 billion a shot over to the Ukraine while they're opening up our borders. They're going to defend Ukraine's borders, but our borders are wide open. They're trying to bankrupt this country, and they're doing it. They're doing it. The only sin on our part is not acknowledging it. This is not a a show about politics, who's right, who's wrong, who's bad, who's evil. Uh, it's a matter of acknowledging certain events that are going on. COVID was a self-inflicted event. They are now admitting that they should never have locked down this country. They should have only protected the vulnerable and kept the economy open. The reason why they wanted to lock down the economy was to get rid of Trump. That's why. So they destroyed this economy, now fueling inflation. We got to live with it. This is the corrupt government that we have. They're losing control of the narrative. You have Ukraine blowing up. You got to ask yourself the question, what comes next? This is going to be a crazy summer. China bailed us out of the 2007-2008 financial crisis. Have no doubt it was China. The problem now is that China may have disliked us then. They hate us now. And after what we've done to the Russians, whether you're for what they did, against what they did, it's a matter of what we did. We weaponized the US dollar. They see it. They will not let it happen to them. But for whatever reason, they're locking down their entire country. They're locking it down. What is that going to do to our supply chain? Where are we going to get our goods from? Pharmaceuticals, manufactured goods. Where are we going to get them from? There's got to be a supply chain shift. We'll be looking at India and Vietnam in the coming months, but I don't think it's time right now. In fact, we booked profits today on Indonesia. So today, the Senate passes no Peck antitrust bill, paving the way for Biden to sue OPEC. Okay. Now, this is the I'm sure that there are Republicans that are joining in on this bill as well. I am not saying the Republicans are a good lot. These rhinos, these Mitt Romneys of the world, they are despicable human beings. But the humor, if you can find humor in this, is that basically we're going to sue OPEC, and every peak in a market cycle, an economic cycle, whether it be 2000, whether it be 2007, whether it be 2020, has always been led by a spike in oil prices. So here we are picking a fight with the OPEC nations, while this potato, Biden, begins buying back oil to refill the strategic reserves. So he emptied onto the market oil that we bought at a lower price. Now that oil is now recovered, he's going to refill at a higher price, thus stoking the price higher on the price of oil for the individual consumer, the U.S. government, and all the while, he's going to stick his thumb in the eye of OPEC rather than engaging and negotiating a rise in production to bring down the price of oil. No. He's too good. He's going to sue them, and he's going to pay top dollar, because who's ever running this ship, whether it be Obama, Biden, whatever puppeteers in the background, they are incompetent and corrupt, folks. This is what's steering the ship for the next 2 years. So let's go to comments for a second. Don't chase option contracts for averages. Kick the can early. Choo-choo trains. Okay, Rick. All right, so we don't have a lot of comments. All right, good. That will drive me to go buy an EV, right? UFO. I got it. Okay. I got you, Donnie. Okay, you got it. Donnie, do you not have access to the members portal to input these? If you don't, let me know so I can get you. That way I don't forget. I know somebody requested Starbucks. We're going to be going over Starbucks, Netflix. Larry wanted Starbucks. Pfizer for cat. Okay. So this is a chart of the 2000 bubble, just to give you a feel for where we're at. So for those who weren't trading back then, I remember this day here like it was yesterday. This is the peak of the dot-com bubble. And to put into context where we were at, I was in Manhattan. I was with my brother. He was home from the Air Force, so I took the day off. We were in Times Square. The NASDAQ building had just been built. And I peeked through. I was selling puts against a company called PMC Sierra. They're no longer around. They were bought out. And they were trading. I sold the puts at, it was the 165 strike. And I was generating crazy cash flow every month on PMC Sierra. And so I sold the 265. It was either 165 or 185, one of the two. And 2 days later, the shares of PMC Sierra were up at 255 per share. Only a couple of days later, I had profits. I didn't book the profits. That failure to book those profits made me the market maker for a stock that went into free fall, just like this. So what happened a few days ago, and I'm going to come back to this comparison in a moment. I want to draw an analogy because the market sends you signals, all right, whether it be visual, whether it be emotional. And believe me, this one's psychological and emotional. So I'm going to bring up a chart of Netflix. Now, I love selling options. Love it. I don't really buy options a ton, but I'm generally the market maker. And it's usually very consistent. The however is when you get it wrong and you have a binary event, you get schooled real quick. So here's Netflix. And these are really hard, fast examples that I'll share with you. All right, so you have what you call a binary event, basically an event that occurs like 4% of the times. Rarely happens. Rarely happens. So back here, I did an earnings trade and the shares collapsed and I was on the hook. I made a lot of the money back on this counter trend rally and I got out. We still took a loss. So this time around, the laws of probabilities were highly against another gap down, unless, of course, there was something wrong with the underlying market. Sure enough, on earnings, hammered again. This time, there was no bounce back. I took a bigger loss. The lesson to be learned from this is that once you see this level of volatility, these events that are only supposed to occur 4% of the time happening consistently, whether it be a 4% rally yesterday on the NASDAQ, 5% decline today, which is not supposed to happen. That type of volatility is indicative of a market change, a sea change. And it was much the same way back in 2000, where you had vicious up days, vicious down days, vicious up days, and your head was spinning. You didn't know what to make of it. That's when I was younger. But now, the feeling I have now is the feeling I had then. It's the feeling I had months before the correction in 2007, the collapse in 2007, the financial crisis, because that one you could see coming from a mile away. This one you could see, but there's a lot of hot money out there, and they're not letting the market drop. But I think that's about to change. So I'll go to Netflix because this is a request. I'm going to go over Netflix in a moment on chart requests. So stick around if you're here for Netflix trade. And I think we are going to go lower, and I'll talk about it more in a moment. So here's the 2000 bubble weekly chart. And here we are today. Not all that much different. Double top, double top. Counter trend rally, counter trend rallies, ultimately resulting in a rollover. Now, what we didn't have here was a rally back to retest this breakdown point like we had in 2000. I was kind of expecting that. I don't think we're getting it. And for all I know, folks, we're going to close the week positive, for all I know. Hell, the transports are positive. I just spilled water on myself. But I think ultimately we are probably going to break lower. I think we have to. It's a healthy thing. But the thing I want to keep illustrate, going back to the 2000 bubble, is that once this thing gets going in the wrong direction, it doesn't stop for a long time. This went on. This bear market went on well beyond this chart. It went on for another year after this chart. 2 full years of selling. It was just selling. Counter trend rallies, selling. It was vicious. But we're going to make money on it. We're going to make money on it. But what I did today was I raised a lot of capital. Even on gold stocks, we raised capital. And now we're going to wait. We're going to let the market tell us, am I right in the directional play that we're about to head south, or am I wrong? And it's okay if I'm wrong. It's just that we want to have a plan in place to make a sound decision for as to why we want to get back long of the positions that we stopped out of today. I'm still bullish on the gold stocks. However, when bubbles get going in the wrong direction, everything sells off. You have margin calls, you have forced liquidation, everything sells off. So just be prepared for what can happen here. And remember this adage, write it down. Today's lows just may be tomorrow's highs. That was what we lived through for 2 years of we had a bloodbath of a sell-off late in the day. On one day, you try to buy the dip. The next day, just when you think you can't make a new lower low, you did. So wait for the markets to send you a signal. We will get them for when we want to get long. But right now, what we're eyeballing is the short side of this market. And initially, we'll start it off with some debit spreads, buying puts, hedging them. And then as we begin to break here, then I'll buy deep out of the money put options. And we're just going to wait this thing out and trade to the long side when we think it's appropriate. Let's go to the weekly charts. All right. So One of the charts that I look at when I decide I want to this updated, when I want to I want to get small. I want to get very, very small. See the dollar bills, my $100 bills in my background here. I want to get liquid. That gives me maneuverability. I've had a bad 2 weeks. My mind is not what it was 3 weeks ago. That needs to heal. It needs to get made right. I need to make sound decisions, build confidence, and then put that money back to work. You need to be able to acknowledge if you've had a bad day, if you had a bad week, it's okay. It happens. Get small, get liquid, get sane. And then, as you're thinking with no positions on the table or very small positions on the table, then you think rationally, logically, you develop your plan, and you're not forcing a trade. If you're forcing trades right now just to get back to even, bad move. Bad move. All right, so I want to begin with the yield curve. And if we go over tonight, that's okay. I'm going to go to everybody's chart request. I think it's important that we have a conversation tonight about this market. If you're new to trading and this is your first go around, ask questions, man. That's why we're here. So this is the yield curve. And I always say, don't worry about the yield curve when the yield curve is declining because stocks are going up. Excuse me. Sorry, folks. Sorry about that. Went down the wrong pipe. You always want to worry about the yield curve when it begins to go back up. All right, so overlaid here to illustrate in blue, S&P 500. Here's a dot-com bubble. We've spoken about that a lot tonight. Here's a financial crisis. This big surge in the steepening of the yield curve. Here's the S&P 500 trading inversely of the surge higher, right? So yield curve, when it steepens, when the yields are going like this, stock market doesn't like that. Why? It's because companies can't borrow cheap anymore to buy back their own stock, which helps manipulate their earnings. What happens when they can't manipulate their earnings? Well, they don't make as much money on paper. They never really did, but they can't manipulate their earnings much higher. Companies that shouldn't be in business are going to have a big, big problem trying to roll over their debt at higher rates if this business model isn't as sound. So what happens? People get afraid to lend. Banks demand more interest rate for the risk that they're about to take. So many of the stocks that you see, especially in the ARK funds, probably aren't going to be around in the next 2 years. You're going to see new companies emerge. They're going to be the new ARK candidates, but many of these companies are not going to be around. They're too heavily dependent upon cheap money. And it's the same exact way in 2000. Pets.com, all these crazy companies, no business plan, lots of debt, and capital dried up, and the stock market rolled over. So here we have the yield curve, which is now beginning to steepen. It doesn't have to necessarily go straight up, but if it does, like it did here, look out below. Look out below because things are going to get real fast. What makes me believe that yields are going to continue up higher, forcing the yield curve up higher? Well, we have a Fed chair that's saying, hey, maybe 75 basis point move next quarter. Probably not, in my opinion. Half a point, maybe. So what's going to happen to the 10-year yield? As risks emerge, banks want more money, people demand more interest, the yield on the 10-year, which is what you're looking at, weekly chart, is going to surge. I don't think we stop until we get up to around 3.25 on the 10-year yield. We closed out the day at 3.66. This is going higher. How do we know it's going higher? Well, the bond market told you today it fell out of bed. Yesterday, the TLT looked like a buy. Today, it looks like a baby seal hit over the head. It's crazy. Uh, Nice bullish reversal bar. It appeared as though we had a higher low getting put in, getting ready to break out. Thank God we didn't buy. We gapped down today. Massive volume. This is a distribution. This type of price action is going to force yields up higher. Tips collapsed this week. We're flatlining on a weekly chart. This also influenced me to step back from the gold mining trade. Daily chart of the tips. This could be a consolidation here. And if we begin to rally, this is one of the things I'll be looking at. If the market begins to sniff out inflation, if they believe that Powell is full of crap, as I ultimately believe that he will be, he's going to have to blink. If they believe that he's full of crap, you'll see it first here on the 10-year yield and on the tips. The 10-year yield will pull back. The tips will rally because they'll fear inflation. The dollar. I'm torn on this one. I thought that we were done going up, but because yesterday what happened on a daily time frame is that after the Fed announcement, I always look at the reaction, and we broke down on a daily time frame. However, we broke out today. Yeah, we closed off the highs of the day, but I'm not ready yet to say the dollar's done. I was more optimistic yesterday. So this also played a role in me lightening up on gold stocks. I had to. The VIX. Folks, I'm telling you right now, if we close above this line in red, which is at around, I don't know, 34, 33.92 on the VIX. We close above this tomorrow. I'll be buying puts tomorrow as protection. It'll be hedged, but I'll have a trade on to the short side. We went into the week short. We covered those shorts early on. We were short of the small caps, and we were short of the triple Qs. We're going to be looking to possibly reload on shorts. Today, we broke back out on the VIX. So here you have it. We break out above this upper band of resistance tomorrow. I would be thinking, I would be very, very cautious with this market moving forward. Now, if we surge up and into the 40s, then you got to start looking to buy stocks. But I'm getting the feeling that they're going to rip this higher tomorrow. Could be wrong, but I think that's what they're going to do. Now, this is a weekly chart of the Dow transports, and this is why I'm open-minded. I don't want to say that I know for a fact that we're breaking down. I'm not that guy. I'm not telling you that. I'm giving you what I'm telling you the market signals that I'm seeing are indicative of what I saw in the past two bubbles. Huge volatility. We're not that far off the top of the highs of the S&P 500, and for that matter, the NASDAQ. We're not that far off. But the NASDAQ fell 70% by the end of the 2000 correction. So we'll be looking to see whether or not the transports sell off and break to new lower lows. If the transports go, if we break down below Let's take our crayon out here. If we close down below 14,500 on the Dow transports, stick a fork in it. It's done. The market's done. See how they held up today. Breakout point failure. We broke out yesterday. This is also known as a bull trap. You saw all the buying yesterday. I was short. I was short of Facebook. I was short of what do you call it? Tesla. But I was forced out of those trades. So because I was worried about a spike up today, and sure enough, this is what you get. This is a sign. This is the type of volatility is what really can eat up your account. So stay small, stay cautious. So what we did is we broke out yesterday. Today we broke back down to this trading range. Very, very bad. In all probability, we're going to move lower here on the transports. Stokes still look good. How was volume? Volume was light today. The Dow Jones, it's up on the week. Refresh that, make sure it's all right. Stokes are rolling over, losing momentum. Whenever these Stokes are down below 50, rallies tend to fade. This is why, until these bottom out, you do not want to go buying a rally intra-week. You don't want to do it because there's a good chance, especially in a bear market, that you fade by the end of the week. It's the same reason why if you see a spike up early in the morning on a day where the Stokes are trading down below 50 and declining, you don't want to go chasing that rally. You want to wait until late in the afternoon to make sure it doesn't fade on you. S&P 500 weekly chart. We're still up on the week. But the Stokes going the absolute wrong direction. Money flow rose. It's rising. Volume is good. RSI, lower highs. Stokes threatening a rollover. Now, this could be a congestion area, setting the stage for a move up higher. You saw it back here to a lesser extent in terms of volatility. You saw it back here. You saw it here. You can't rule it out. So it's a rules-based process, right? If this, then that. So if they break it out, well, then I'll be a buyer of stocks. If they break it down, well, I'll be shorting stocks. Simple as that. In between, I'm not doing a goddamn thing. Maybe I'll put on some very, very deep out of the money, expensive options trades, selling them, generate some cash flow, and keep myself busy. But otherwise, there's a clear and defined head and shoulders setup. Left shoulder, head, right shoulder. This is we break down below 405 on the SPY. It's all over. I know there's a gap to fill at 402. Carter Worth thinks that may be the bottom there. I respect Carter Worth a lot. I don't think he's right on that. Qs, weekly chart. We are down in the week. No great shock. Stokes still declining. Volume, very heavy. Institutional distribution. Oops. Daily view. RSI, lower highs. We are hanging on by a very thin thread, man. How is volume? Huge. The banks up on the week. It's hard to believe after today you still have indexes that are up. Volume heavy. Daily chart. Very similar charts here as to the rest of the indexes. Volume very heavy. Just take a crayon out here. Let's see whether we break out to new higher highs or do we roll over, putting in a lower high. Now this here is technically bullish. Double top on ADX red. Technology, XLK, it's up on the week. But these topping, if we close out the week with this type of topping action, it's what the signal, the market signal here is that what the market is telling you through this chart, it's saying that, okay, we broke down the week of April the 18th, the week of the 25th, they tried to rally to recapture support, rejected. This week, despite the fact that we're still up on the week, all up weeks are not made equal, right? So even though we close, if today were Friday and this were closed and this was the end of the week chart, I would say look out below. We're going lower, even though we closed up, because we rallied and we were rejected at that 145 mark yet again. So what this chart is telling you is that there are far more sellers than there are buyers at those levels. At the 140 level, there's a little bit of a tug of war going on there. This is the Rubicon. Do we break it? Do we have a continuation breakdown next week? If we do, we're coming down here to 125. So in the case of, suppose we wanted to put on a bear spread on XLK, meaning I want to get short of XLK. Now, a bear spread is when you sell a deep out of the money call, or put. And for those not familiar with what a put is a bet. It's a derivative that a stock, a commodity, an index is going to go lower. In this case, an index. So I'm going to sell that put at 130 to 135 because I know the support there. That's probably going to be my max profit. We'll probably bounce off of that, and I'd want to be out of that put trade anyway. So the sale of that put at that price helps me finance a deep in the money put option. It's called a 70-30 delta trade, meaning the 70 represents for every dollar move in the price of the XLK, the option moves 70% or 70 cents. Whereas the one I sold only moves 30 cents or 30% of that dollar move, if that makes sense. So you're not making a dollar. You're not even making a 70% profit. You're making less than that. But it's a way to hedge your bets until you know this market is broken. And then on a counter trend rally up to resistance, then you buy just puts outright. Otherwise, I'm not ready yet. I'm not that convinced yet. I haven't talked myself into it yet. I want to see the break. And you're going to know it. Because days like today will be consistent. And after a while, they'll stop being that consistent. It'll just be day after day, 1% down, 0.5% down, 1% down. It's crazy. Semis still up on the week, but again, just like with the XLK, resistance above, lots of it. Volume heavy, daily view. So here's your downtrend line now. All right, so yesterday we broke out. Today, breakout point failure. We broke back down into a trading range. That is extremely bearish. It's more bearish on an individual stock, not as bearish on an index, but it's bearish nonetheless. So there's a very good chance we break to the downside on the semis. If not tomorrow, next week, unless, of course, we rally back and close above 230. LABU. This is one where we bought the dip yesterday, profitable on it yesterday. Today, had to sell half the position. So there are no safe havens. Just when you think the stock can't go lower, or in this case, an ETF goes lower. So it just goes to show you, if it kills you. You had a profit, all of a sudden it turns into a loss. You know, you got to fight that. You want to get back to even, just screw it. Let it go. Let it go. But we will be watching LABU to get back involved with it. We'll still trade options on it. But here's what, this is the reason why we had to get out. We broke out yesterday. Today, breakout point failure. Not only did we break back down into this trading range, we closed down below the lower band of support. Huge technical breakdown. Huge. But this does trade with the market, pretty much tick for tick. So if the S&P 500 rallies or the NASDAQ comp rallies tomorrow, this will rally along with it. Energy. Energy put it in a new all-time high today, the XLE. Or this week, I should say. Let's go to a daily chart. This is an outside reversal bar. We broke out yesterday. Today, we broke back down. Again, another sign of a bull trap, breakout point failure. Call it what you want. Call it cupcakes. It doesn't matter. It's not good. It's very, very bad. Horrible, horrible price action. When you get breakouts that fail at all-time highs, take a step back. Watch and wait. Don't hope when you should fear. Get liquid. That's why we have these $100 bills in the background. Represents liquidity. Staples pulled back. We're down on the week. The problem with the staples right now is that they're very dollar levered. This sector here brings in more revenue out of any other sector from overseas. So as the dollar continues to rise, expect more pressure on consumer staples. Very bad day today. Very bearish. Discretionary is probably one of my favorite shorts. I mean, this is done. The fork has been stuck in. Look at this. We're going to roll over another lower high. This is going lower. I think this is a new 52-week low today. Yep. New 52-week low. Bitcoin. It's not looking good here. It's rolling over. It was up big this morning, but we faded. And that's the worst type of price action. When you're up and then you reverse, it kills confidence. Daily chart. Looks like we're going to roll over here. So I'm watching this stock to short MicroStrategy. MicroStrategy was down 14% today. And we took out the lows of February today. This is going lower. The reason why MicroStrategy, I bring them up when I speak about Bitcoin, is because MicroStrategy is actually, in essence, on margin. They borrowed money to buy Bitcoin with a basis cost of $30,000 per coin. Now, Bitcoin, if I was Michael Saylor right now, he's the CEO, 30,000 per coin is not that far away. We could be there tomorrow. So this looks like it's going lower. Emerging markets, dollar's still strong. You got to avoid emerging markets. I want to like them. We have been long of them. I was long of IDX. This appears to be topping out. We booked our profits today, moved to the sidelines. Again, we raised liquidity. We can see what happens. We can always buy back in if we too much of wimps and I couldn't take the heat. Fine, I'll have to pay up to get back in. So what? But I'd rather have the confidence that I'm right and buying properly rather than hoping when I should fear, because pretty much every chart that I'm looking at tonight is telling me you should be afraid. You can hope, but hope with liquidity. Be liquid. So that way, if we do break lower, you could short. If you don't like the short, that's fine. I completely understand it. You'll have money to buy the dip. Gold. So the dollar's strong. The Fed raised rates, despite the fact that oil is continuing to move up higher. Energy stocks are made new all-time highs this week. Gold is down. Couldn't hold 1900. So this is a classic case of a breakout point failure. I spoke about this a couple of weeks ago where we had broken out the week of April the 11th. I thought we were going to new all-time highs. We fell just shy. This could be a double top. I don't think it is because I don't think they're going to fight inflation appropriately. But in the short run, we failed to hold the breakout. Sellers moved in, took gold down. Is this the bottom? What do I know? I don't think so. I think we're going lower because our Stokes are moving down below the 50 mark. Maybe those pop up higher tomorrow. One trading day left to go. I haven't said that yet. All these weekly charts, they can change dramatically on one given Friday. RB. How about did you mention that Powell was speaking? Yeah, it was mentioned by Zero Hedge that he was going to. I don't know where he's speaking, but it was mentioned on Zero Hedge. I shared a tweet earlier. I want so badly by the bottom of Twilio and Canva. Yeah, those types of stocks, you got to be careful. I mean, I use Twilio to send out SMS alerts to members, and believe me, they bill me. Seems like every day, and you would think it's a cash cow, but you got to look at their balance sheet and see whether or not the weekly charts and monthly charts have bottomed out. And I don't think they have. You're welcome, RB. Yes, Paul. Thank you. Smash the like button if you would. Please smash the like button. All right. So daily chart of gold. And notice how gold's not getting spared this sell-off. I woke up this morning. We were up like 30 points. We barely closed up. Now, tomorrow, I only care about one thing. Do we break? Is this a bear flag? Or was I a wimp today? Is this a higher low? Do we have a breakout on RSI? Yeah, we do. But price trumps indicators. If you're sitting there and you're looking at a chart, you got a bunch of indicators up there, you always go with price. Always go with price first, then go with your indicators. Volume was good, but a lot of it was selling. Now, the reason why I bailed on NUGT, a portion of it anyway, and we may have to unload more, is this. Daily chart. This is an outside reversal bar. This is no joke. So I think these Stokes stand a good chance of rolling over. This is very, very bearish price action. Very bearish. GDXJ, we didn't sell any of this yet, but we may. Outside reversal bar. You know, you can't fight this. You know, you have to acknowledge these patterns and say, okay, it's time to raise capital. It's time to get liquid. Silver. Still holding support on the week. How do we do today? Down day. Not a good day. They think there's more downside here. Okay. How did our Cal-Maine Foods do? Not looking good. All right. Let's do some chart requests and we'll call it a night. Okay. Let's talk about Netflix. All right. So Netflix, I think, is going lower. The question is, where is their support? It's hard to see it on this chart. Let me go to my annotated charts of Netflix. So here's our daily chart. Now, on Market Wrap last night, I mentioned that, you know, while Netflix closed at the highs of the month, I didn't like the price action. I still believed it to be a bear flag setup. I don't think I said that, but I was looking for was a pullback and looking for a higher low. Maybe we'll get it. But as it stands right now, at this snapshot in time, we have broken support on Netflix, and it looks as though we're probably going to move lower. Now, I did nibble some today, but I'll probably stop out pretty quickly because if we do break down below the lows of, I'm even using today for that matter, if we go lower from here, I think that where we may ultimately end up going is here. Right here. Around 175 per share. And we're not that far off. We could be there tomorrow. So 175 per share. If that fails, 158. So I would not be a buyer of the shares yet, not just yet, despite the fact that I bought them today, but I may have to stop out. All right, let's go to other chart requests. Starbucks. All right, Starbucks. I haven't looked at this chart in quite a while. On the month, we're up. I don't like it. And I'll tell you why I don't like it. It's part of the consumer discretionary sector. I don't like staples right now, and I hate discretionary because you have inflation at the pump, at the supermarket. People, they're not going to be able to dole out that $5 for a latte. So I think that we're going to break lower here. We're coming down here to about $65 a share. Weekly chart. We're still up on the week, but so are the major averages. Stokes are hooking up. It's not a horrible chart, but we are off the highs of the week. The markets are telling you that 82.75, stiff resistance. Daily chart. Now, these are the automated trend lines. And they're picking up on support below. If we fail to hold this lower band of support, Starbucks becomes a short. I would not short it now. Do not short Starbucks now in anticipation of a break because that's not the way you short stocks. You wait for the break. Okay, next chart up. Pfizer for cat. So Pfizer broke out yesterday. It retested the breakout point today. And I'll be honest with you, I looked at this chart on stockcharts.com earlier today, and I did not pick this up. I think it breaks. I don't think that this is going to hold. I think we roll over, but it's not a short yet. We broke back above resistance last week. We're still holding it. If we break to a new weekly lower low, I think we come down to 45.40 per share. So on a break to a new weekly lower low, that's not what I wanted to do. I screwed that up. On a break to a new weekly lower low, I would be shorting Pfizer. Okay. Note the lower highs on Stokes. KD. KD? I don't even know this company. KD. Did somebody request this? I want to make sure I'm reading my handwriting properly. All right. Can somebody confirm KD is the symbol that they requested? And I'll come back to it. Oh, you gave the wrong symbol, Donnie? I see. ICPT. All right. ICPT for Donnie. Don't go to Tom Lou. Damn it. Gorgeous. Beautiful weekly breakout. Beautiful higher lows. I'd be a buyer on a retest. There you have it. It's a good looking chart. Stokes are rising. Beautiful breakout today. You're going to get a retest. If you don't get a retest, you're coming up here to this rising upper band of resistance at around 21.25, but it's rising subject to change. So it's a good looking stock. I wouldn't chase it. Not my style. I would wait for the pullback. All right, LTMH, HM, Corp. Monthly breakout, but it's early on in the month. Weekly breakout. Looks good. First, it's got to hold the week's gains. Next week, it's got to retest the breakout point. Rinse, wash, repeat. Looks good. Bullish. Daily chart. You got some resistance up here. I would definitely wait for that retest, right? Take it off, put it back on. Beware. Don't buy it into resistance. So a lot of people did. Can you imagine being the guy who bought up here and it closed down here? Don't let that be you. Wait for the retest next week. What else do I have here? Let's go to Tom Lou's CWH Camping World. This is a familiar one now. Is Marcus Lemonis the CEO of this company? Or at least a shareholder? I seem to remember that. I'm not sure if he still is. A great weekly breakout here. We hit a lot of resistance, a lot of selling. You have support at 27.62. I want to see if we close out the week above this resistance level of 27.62. If it fades, I would avoid. Daily chart. Oh, nice pullback and retest today. But you were rejected. They rallied it, pulled back. Probably need another day or two of consolidation. And the market's got to do the right thing. The market needs to go up. It could be a cheap stock, but sometimes that doesn't matter. Just like when stocks are expensive, it doesn't matter until it matters, like right now. So if the market rolls over, I would wait long and hard before I put on new positions. Don't you picked it up at 25? You want to add more? So you're averaging up? Okay, good. That's good. Just watch for another retest. Make sure you close above weekly resistance. So I would wait until late in the day tomorrow because you don't know if they're going to flush everything out tomorrow afternoon. So just be careful. Wait until late in the day. Make sure we close above this resistance level. If they fade it, book your profits. Oil futures up 0.5%. That's not going to be good for the markets. All right, folks. Everybody have a great night. I'll talk to you tomorrow. Be well.